All right, Happy New Year, everybody. So, we're going to be doing the last quarter investor trend review from 2022. Again, Happy New Year, it's January 2nd. Here's our disclosure for 912 Financial Group, previously named LCR Financial Group, as you can see in the disclosure, but that has been changed over. So, what we're going to be looking at here is the investor trend period, right? Which we're going to do kind of a one over on this every quarter, since the whole concept behind the investor trend is that we're picking some very, very deep out of the money put units that we're going to be selling, um, and we're going to be selling them each article that comes out in order to either accumulate stock, price goes down to that part, um, or if we're moving in the right direction, we are going to collect the premium, and then we'll look also at doing the vertical spreads if they actually trigger to see what happens. So, yeah, getting started with that, we're going to be going over pretty much each issue, and I'll show you some charts and kind of how the featured trade worked as far as the BFF goes and where we're at with it. So let's get started. Um, what I have set up here is a side by side, right? We got the first issue from October. And remember the way we do this, right? And just to tell everybody that the biggest thing is that like results here vary because it is still all about you making a decision on what trades you're going to take as far as a trader trend or investor trend or both, or just and to be a aggressive trader or conservative trader and take those recommendations as well. So I could share with you kind of what I do personally, but whatever you guys want to do, it's all about just how you want to execute your own particular portfolio. Um, to going back and testing things if you've been subscribers for a while, just keeping an eye on it, getting it for a few months and just kind of running a demo is never a bad idea either. And so, running back through, here's what we're going to be looking at. So if we look at these things, right, we got market expectations for October, and that's always going to be the best thing to look at. So if we kind of go through here and we read September looked to its coolest month, big down 1.5%, and our trifecta of expectations before that of a July retest will be probable, June possible, 20 election lows off the table, but not in September, but October looks on track to sweep. It's not a favorable time to be a bull, with or without the recent Credit Suisse news. The market's only hope, at least until the 2022 midterms, should result in Republicans becoming the majority in the House to create gridlock or to see enough negative economic data for the Fed to change its narrative. Yes, there'll be green days, generally following red days, but the macro trend is down and the intermediate trend is down. And there's a clear 5% window to the downside before we reach an oversold condition. So once again, investor trend suggestions are preferred. Those subscribers can use trader trend suggestions now that the FOMC meetings in the rear view. In fact, trader trend short call suggestions are a great yield generator. For those investor trend suggestions that resulted in owning long stock positions at discounted levels in the last investor trend run that we ended up with a lot of stock. Remember, all we're doing with that when we have a long stock, you guys, is we're selling those trader trend short calls, making covered call positions to get some yield. So that's what the recommendation is here. If in fact you have that short stock or you're holding that short stock right now, we're not trying to be doom and gloom, but decisions are being made at the top, White House and the Fed, that are counterproductive to consumer and rising equity prices. Globally, the dollar keeps making multi-decade highs and Putin's up the nuclear rhetoric. Nothing bullish right now is there's nothing to be bullish about. That said, we just got to trade what they give us, and what they're giving us is to go wide. As for commodities, metals aren't going anywhere while the U.S. dollar continues to act as a global safe haven. But if economic data gets bad enough to change Powell's tone, they have plenty of room to run. Bonds are testing 2014 lows, but if we get a weak jobs number, they too could run. Given our choice between owning equities at these levels or bonds, we chose bonds. Choose bonds. We think it's much more likely for the S&P to drop 10% than it is for the 30-year bond to drop another 10. As for oil, anything that kills it's a global recession, which we might see. But traders are positioning for a hard winter in Europe, the Nord Stream pipeline being one of those big catalysts there. You can't keep tapping the SPR, it isn't bottomless, and planned OPEC cuts in production. Lower prices look improbable, bottom line, given our outlook. We just think investor trend suggestions are still the way to go. So going through that, we'll say for this one, if we look down, And again, I could pull up the results here. The FXI trade, uh, it was a 2120 March 2120 631 BFF for a 525 credit. Now, if we look over here, right, we have we have our stop in 1934. Target was 3076. The trade is still alive as of today. We opened it for that credit. It's down to now 282, so we are up to 43 on the position. Now, if I show you a little chart, here it is, that's Intel, but FXI. So we have FXI. Now, remember, guys, I'm going to balloon this way out so we can actually see what's going on. Oh, actually, pull it in. So this is kind of where this trade happened. Remember, this was the October uh, recommendation. So the way this works, and I think I went over this before, is that the way this is color coded, the red is going to be like when we're actually in the red. Our stop loss down here was 1934, which is the very bottom of the screen. Take profits up at 3076, and the gray area here, right? That is our window of forgiveness. As is the green, but the green we're actually going to be mechanically like long actual stock in here. So this is where we're kind of making money running up. So as you see, we got in right around the beginning of October. We took some heat, which these BFFs do, right? We went way down in November, bouncing off the lows here, but we never actually got stopped out. So you just kind of let it happen. I mean, it's a very much a set and forget thing. And then since then, we've seen this rally up into the 28.30 where we're poked out now at the close of the year, and profit target's not too far away. So you just let it go when you're short 21s, get into or get down to 5 cents. Make sure you bid them back, and then you have a free bull call spread running up to you take profit hopefully. So that's where we're at right now in FXI. Right, it's still live and still going. Okay, so let's go back to here. Right now, the first round of put sales here. Uh, if we look at HYG, right, we have 70. Now remember, guys, if you're an aggressive trader, you sell a 70, right? You just allow Simon to accumulate stock here. And again, I'll say it again, accumulating stock and selling naked puts are the same thing. If you've owned 100 shares of any stock, it is, uh, it is basically going to be like having a naked put, right? So I know there's a lot of stuff out there saying, oh, don't sell naked units, yada, yada, yada. It's a lot of it really is not that scary if you've actually owned uncovered stock positions. So these guys all got triggered, right? Like it got triggered here, this obviously filled here. So if you were an aggressive trader and you took this, then you basically sold those December units and they went out worthless. So if you sold them for 187 on this first issue, then you made 182 as you got those back to 5 cents. Now, if you are a conservative trader, there's nothing wrong with staying in cash. Actually, in these big macro bear trends, the investor trend is pretty cool because it will keep you out if there's bad positions, or sometimes these things are so far out of the money that you won't even want to get into the trade. Period. So staying in cash is a position, and a good position sometimes the best. So going through, you'll see that all these things hit, right? Just they hit, the investor trend hit. We made a lot if you were holding out for these. If we went to XOP, let's go look at one where we had an opportunity to actually do the spread. Let's see, gold, silver. All right, so with XOP, we if we had price drop down to 123.84 below, um, in early October, then we would have actually got into the trade with this bull call spread. Now, again, you guys, you don't have to do the vert. The vert is kind of a hyper bullish thing. So when you're doing these investor trends or even trader trends, the vert is something you don't have to do. It's totally up to you, and it's kind of a discretionary aspect. Um, but we didn't get an entry anyways, even if you had wanted to take them on either one of those guys. Okay, so on XLE, XOP, and now DBA did um, get the vert, if you, it did trigger if you had jumped in there on the 3rd of October, and the stock actually closed when the VERT expired at 1021, and so we lost 45 cents. We bid the thing back for a nickel there, and so it never actually got to our take profit, and everything else went out worthless, and so there we go on that guy. Okay, so let's pull up the next ones. So that is for October, and if we clear off, let's go this one. Oop. All right, so let's go mid-October. So mid-October pops up here. With that, we got mid-October here. All right, so mid-October. And here we go. We're looking at a mid-October issue and just the highlights of this, right? Well, that might have been it. Checked all the boxes. July and June retests in September and a test of the 2020 election lows in October. Only the Nasdaq did that. The S&P dropped down the election day high, close enough. But why? It's not a favorable time to be a bull. The U.S. bond market falling off a cliff. Yields came to 16-year highs. The Fed's expected to hike rates by 75 basis points in the November meeting. China's trading at 16-year lows. Inflation's killing the consumer. Do we think that might have been it? Because of everything we just stated, the equity market doesn't seem to care. The fact the S&P isn't trading 3,400 right now is ridiculous. Remember, this is mid-October, so all this stuff happening at the lows. But you can't fight ridiculous. Ridiculous only becomes more ridiculous. And you only have two choices in that case. You can join the crazy or just step to the side and watch from the sidelines. For us, that means going to the investor trend suggestions. The strikes of the short puts are far enough out of the money to give you great accumulation levels. And grabbing as many featured investor suggestions as margin will allow. The covered BFF with its wide window of forgiveness is the play. Why? Because even if this isn't the bottom, the actual bottom isn't far away unless Russia goes nuclear or China invades Taiwan. Those are obvious game changers. And maybe the price action is as ridiculous as it looks. It's always darkest before dawn, and the Fed could signal a pause after the November hike. Midterm elections could rein in the progressive agenda, and there are some crazy opportunities to buy quality companies at decade low levels. Bottom line, don't fight it. As for commodities, metals aren't going anywhere while the dollar continues to act as a global safe haven. But lately, we've seen central banks draw a line in the sand at 114. So any narrative change could produce a nice run. Bonds are testing 2011 lows, but they could really run too. Last issue we said, given our choice between owning equities at these levels or bonds, we choose bonds, and we're sticking with it, especially now. It's much more likely for the S&P to drop 10% than it is for the 30-year bond to drop another 20. As for oil, the only thing that kills it's a global recession, which we might see, but traders are positioning for a hard winter in Europe, just like Jude said last time. Given our outlook, investor trend is the way to go. So going back to investor trend on Intel. Intel was the 22, 2750, 3750 BFF in April. We got in, you can get in for 1050. It did trigger, and it's still alive. Let's go actually check the chart out on it, see where it's at. So we go to Intel. Boom. All right, so here's Intel. So again, if I kind of back way out, actually, I'm gonna pull this back to a monthly chart almost to see the price levels. Things are so discounted. Mm-hmm. All right, so here's monthly max, right? So we came down trading at 2016 lows, and here is our setup, right? So we have a stop loss at 1934, window of forgiveness in here between the 2250 strike and the 2750 strike. If we go out there, you don't lose anything. You actually make because of the credit, on the bull put spread and the put expiring. And so then you have your profit target way up here at 35.98. So this thing is still alive, kind of sitting right in the middle of the monthly, camped out at 26.45. And that's where we are. We just got to let it be. These things just really go. Hopefully we can get our short units back for a nickel, even if we don't run up to our take profit. So let's see, going back to here. So okay, we opened up for 1025 credit. It's still sitting right where we opened it, basically. Um, Remember, all the actual uh, investor trend, put sales are going to continue to be the same, the December unit expirations. So if you sold HYG again, right, then you in December would have closed it out for 122 or 117 once you got it back for nickel. TLT went out worthless, LQD, EFA. Again, going back into some of the ones that gave us an opportunity to go into a vert, right? EWW hit. So if that hit, it definitely did trigger, right? You had the bull put spread along with the naked put because remember when we do the bull put spread of the bull call spread on these things, it's because of we have a dividend coming up, right? So the vert got entered for 570 on the credit as price went below 48.09, and then the stock actually hit target at 52.24 on November 2nd. You closed the vert from 140, made 430 on the vert, plus getting the putback. So that was a great trade. Um, EWZ, investor trend, did the same thing, right? So as the international ETFs, and they popped pretty good after October here off the lows. So that went same deal. The bull put spread here, you got entry, made it to your target, um, and that continues to rock. So again, you don't have to take these, right? You don't have to do the spreads, but if you did, they did hit and they did get covered. So continue to go down. The gold went out worthless too. Silver went out worthless as well. And remember, guys, selling these naked puts, the whole thing was that uh, you know you basically either got the you got the premium in December, or we would have ended up owning aggregate stock from selling all these naked puts each every 2 weeks, every issue, um, and then taking hold of all that stock at the end of December, right? Or as much as you wanted to, or you can maintain cash positions. So that's something for you to manage your own risk and margin on for sure. So going to XME, we definitely got another trigger here. XME, so we got the vert got entered for 875, and that guy went out too, and it was again a bull put spread. So we go down, there's a couple XOP, that got triggered, that didn't get triggered, okay, so this one didn't get triggered. No call on the vert, but everything else went out worthless. DBA, once again, just like the last issue, we sold the put, we got triggered on the bull call spread, and it got stopped out 55 cents. Okay, stopped 30, we lost, well, it got stopped out, so we just lost 25 cents. Everything else went out worthless. And XBI, the 47, there was no sale because it was under 15 cents. So again, when these things, you guys, when the naked puts are so far out that there's no premium in them, um, just don't put them on. Like, it's pointless to sell uh, you know, 15-cent put or less, and then only make 10 cents or 8 cents on the thing, or God forbid, like 2 cents trying to get them back for a nickel. So that is mid-October. Moving on. All right, so let's go to beginning of November. Back it up. November. Okay, so here is November. All right, so if we go through the market expectations once again, all right, we're still sticking with it. That might have been the downside. Again, we checked all the boxes, the July and June retest in September, a test of the 2020 election lows. And now we have the FOMC meeting and the base point hike behind us, uh, the jobs report, and we're about 300 yes off the October lows. So why are we bullish given we're in a macro downtrend? For one, we aren't bullish, we aren't bearish. We're thinking range 3,500 downside to 4,100 to the upside. The U.S. bond market is still near 16-year yields highs. The Fed's expected to hike rates by another 50 points in December. China bounced off 16-year lows, but who knows? Inflation is killing the consumer, and yet there are some positives, mainly midterm elections and the GOP-fueled gridlock is coming. Markets love gridlock, plus inflation has probably peaked, and the Fed is closer to another pause than another 75 basis point hike. And there's a seasonality phenomenon. We could easily be trading back above 4,000 in the S&P. It would be ridiculous, but again, you can't fight ridiculous. It only becomes more ridiculous. And at that point, you only have two choices. You can join the crazy or step aside and watch from the sidelines. For us, that means going for the investor trend suggestions. Again, the strike, just like in the last issue, the strikes of the short put are far enough out of the money to give you great accumulation. and grab the feature trade suggestions. These BFFs kind of margin hogs, so you got to make sure that you're um, you know allowing your margin for that. Okay. Um, and just a repeat of the last issue with where the Dixie is and where central banks draw the line to say on the dollar. Uh, and again, we're sticking with given our choice of owning equities or bonds, we choose bonds. In hindsight, you guys, by the way, bonds did. They had a big rally. TLT hit a low of 92, and then it rallied 8 or 9% up to like 110 or close to, whereas the S&P really didn't move a whole lot off of 3850. And so uh, that's kind of where we're at now. So again, investment trend suggestion is still the way to go. So let's look them over. We got Meta. Meta was the March 70, 95, 120 bull call spread. And so let's go take a look at that. So let's go to Meta. All right, so Meta. So I drew this out here, right? And here was the entry. This is a monthly. I had to go monthly to get back to the levels we were trading out of. But here's our stop down at 70.30, and take profit was 119. I'll punch into the dailies now so we can see. Okay. So this thing we entered being in November right here where the entry is, it pretty much went right to profit. So look, I think 1, 2, 3, 4, 6, 7, like 8 or 9 days. You might not have hit it right around here, but you definitely got it over here. So that sucker just exploded right into profit. And so if you got in after it triggered, Meta hit target on December 1st. The recommendation was updated recently to reflect 75 put. It opened for a 25-cent credit and it closed at 13.35. That's a huge profit right there. 13.60 per spread you put on. Okay. Um, Now going through everything else, right? We're going to sell on the 70 and HYG that went out uh, for nickel, TLT, went out for nickel again, LQD went out, WWEFA went out as well, 56 cents. These things were just killing it. So every month you were loading up, definitely were holding a lot of naked puts, but they all went out. And EWW again, if you want to go for the spread, go for the vert, you can. This one actually had no entry. All right, EWZ, that one did get in, and it got entered on the 24th, and then stopped on the same day. So it was just a quick stop out on that guy. And gold sold the 152 again, went out worthless. Silver selling the 15, you wouldn't have done it because it was under 15 cents premium. XME, once again, you sold the 48 and you got the naked put back, and then um, your bull put spread, you got into it on the 9th for 835 credit and recovered at 635 for a 230 profit expiration. So it went all the way down, never actually hit target, but because your short put, basically lost so much premium over time, you collected it and you made some money on that too. XLE, right, so the XOP, I'm sorry, XOP, you sold the 132 and for $1.72, and that went out worthless. The vert did get entered for a 466 credit, and at expiration, December 16th, you covered it at 320. So you made, 145, or 145 loss at expiration. Um, and so we got XLE. XLE no call entry on the full call spread, but you did sell that put still and still collected premium in December. DBA, kind of broken record on this guy, right? We sold the put again. Got stopped for break even on December 6th. The vert did get entered and it was stopped uh, on the 6th of December as well. Um, Going down to XBI, you didn't get in once more because the put sales under 15 cents. BNQ, you got back after your 75-cent, your 75-cent, 75 put was sold. XHB, no entry. and then all of the U.S. major market uh, trades got put in again and went out worthless in December. All right, so again, moving on, guys. Reviews going good. Investor trend clearly killed it as we continue to review these. Yeah, so let's go mid-November. And mid-November. Okay, here we go. So mid-November article. Here we go. We're still feeling good about that. Might have been it for the downside call. The U.S. bond market rallied dramatically. Uh, China rallied 20% off its lows, and that better than expected inflation data with the CPI not coming in too hot. GOP taking the House. Gridlock is here, and the bullishness of Santa Claus going to take something special to challenge the October lows. Doesn't mean we're expecting a run to all-time highs. Upcoming economic data can cause a cooling enthusiasm, but pending an unexpected increase in aggressive tone out of the Fed, we could see year-end S&P exceeding 4,000. Maybe that strikes some as ridiculous, given inflation is still very high, tight oil supplies, possible winter Russian offensive in the Ukraine, and talk of 10% mortgages being possible in 2023. But we can easily be trading meaningfully above 4,000 in the S&P, and we agree that would be ridiculous. But you can't fight ridiculous. Ridiculous only becomes more ridiculous. And again, just like we were saying last time, you can join it in or step to the sidelines. For us, that means going to investor trend suggestions. Once more, not the same of the just like last month before, talking about the benefits of getting those out of the money short puts and getting into the feature trades. And so again, bottom line here, guys, we'd avoid selling calls via the trader trend suggestions and feel more comfortable with the investor trend neutral suggestions than the bullish one. So again, investor trend neutral suggestions are to just sell the put and to not do the vert. Okay, the vert is the bullish suggestion. So this is just a suggestion on what you did. So let's review it. We jumped in Tesla. Tesla was the June 100, 182.05 BFF. Uh, it got triggered for a 5-cent credit. Did open. Um, it is now sitting at 21.50. So basically down 21.45. So if we look at the chart, right, again, this is early November. So, or I'm sorry, mid-November. Let's go to Tesla, and I'm sure maybe everybody's seen Tesla on the news. Nice bear run going on there. It could be a great opportunity. So here, let me back it out to a monthly so you can kind of get a better idea of what's going on here. All right, so here's the monthly, right? This is the gray is our area of forgiveness. Entry was mid-November, so it was up around, it was down around here, and we'll look exactly where it was. We got a stop down at 91, and we're just waiting. Things sitting right there. So let's go back to, so we got in mid-November, so we got in right around maybe 180, the exact day, but let me probably look at it. So we are taking some heat, and we're in there, and it is what it is, right? So we just kind of let it go and do its thing. Okay, got very close to actually taking profit. So, but it didn't. So, so we're close, but here it is. So we're sitting in Tesla, uh, taking some heat on it, but it is still alive. All right, going back through everything else. Remember, we're still selling all the same units, right? So you could look. They all went out worthless. EFA was a no entry because you couldn't get 15 cents for it. EWW didn't have an entry on the vert. But again, we didn't recommend taking the vert anyway, the bullish thing, just the conservative trade there of doing the naked put. But it didn't get hit on that anyways. XOP did. Let's go back down for all the gold ones. Well, worthless, nothing on silver. XME, no call entry, no entry on the call vert. Yep, XOP got entered. So XOP, the vert was entered for a $37 credit. So this is the bull put spread plus the naked put that you put on the quarterlies. Um, you would have covered it for 33.15 for 385 on December 16th if you had held that one out. XLE, no entry. DBA, again, kind of broken records, that thing continued to range. Um, but if you had just been selling the naked 20, then you would have just kind of collected that premium every time. XBI didn't get a fill again, and then all the other ones were out worthless. Okay. All right, so going on to December, here we go. All right, so December, rock and roll. Here we go. Kind of the same thing as mid-November. Right after the downside call, bond market rallied. Uh, we're looking at the seasonal bullshit of Santa Claus, the somewhat dovish tone of the chairman. Powell came out and said it would be not necessary to tank the economy to get control of inflation. The market loved it. Rates will still rise, 50 points in December, but not 50 after that. But Powell isn't looking to cause the Great Financial Crisis 2.0, so we don't expect to run to all-time highs, as a repeat of the last issue. Cause it, kind of the same thing here if you read through it. And again, you guys play it wide, right? This was the whole thing. Bonds were a little better. Metals finally kind of started moving. Buying a weakness is the play here. Um, and let's go over and kind of see how we did. So jumping into BABA, right? Did BABA get filled? BABA did get filled. It opened for 25 cents. Um, the June 6090 105 BFF. It's now at 12-cent debit, 37 cents. Let's go take a look at it. So mark all these off. So BABA. All right, so here's BABA, right? This was an early December trade. See where the entry is. We're in the window of forgiveness, up a little bit. Stop is way down here, 720. Take profits up here at 101.70. So that's kind of it. Just let it play out. BABA there. Now, since we're getting closer to that expiration time, this is kind of what happens, you guys. As we get closer to like the expiration of the quarter, right, where we're selling these naked puts the whole time. If we're getting further away, clearly, there'll be less premium in them. So you can see it happening across the bonds, right? None of the units were close, so you didn't get into anything. You just basically didn't trade them. EWW definitely had an opportunity to get in. And if you had a win in that one too, you could have sold the 49 put for 25 cents, went out worthless, and the vert got entered as well and went out for break even. EWZ, the put sold at 15 cents, went out worthless. If you go to gold, 168 was sold for 287. And you got stopped out that same day, lost 87 cents. The vert also got entered and stopped for 53 cents. So you definitely got hit on the gold one if you jumped in. But remember, again, it was not recommended to do the real bullish. Uh, Actually, no, this one was right. Yeah, it said commodities metals are finally running. Buying weaknesses to play. So that was a play. So we did take a stop on that. So if you had to jump into it, um, so it got hit. They took a stop. Silver, you sold the quarterly at 67 cents. Went out worthless. But silver, the actual vertical, the 21.24 full call spread, jumped in for 62 cents. You closed it for $1. Expiration for 38-cent profit. XME, XME sold the put for 138, went out worthless. And if you had to jump in the vertical, then you got it for 210. You closed it at 80. Expiration for $1.30 loss. XOP, XOP, you got sold. You sold the 130 for $1.20. It got stopped December 8th, 520, lost $4. And if you entered the vert, you got stopped out too on 12.8, and you took a 55 loss on that too. XLE, you sold 70, 30 cents, no entry. DBA, again, as it ranged, still could have sold that put. Um, Still could have sold that put, got stopped 50 cents, lost 15 cents on the 6th of December. XBI, VNQ, XHB, nothing was filled there. SPY, you would have sold the 417 at 35 cents, stopped on the same day, lost $1.50. The vert got entered on 12.5, stopped the same day for 16.68, stopped at 17.66, lost a buck. The Qs, you could have sold at 15 cents and it went out worthless. IWM, no trade. All right, and finally, as we got the mid-December article, mid-December playbook. Let's check this out. So mid-December, here we go. All right, so a little bit of repeat of the same one, but it might have been for the downside. Uh, let's see, we just don't think there's enough news or enough days to take out the market below October levels. Add to that, as we enter the end of the year, down here is a high level of expectation of S&P buying via end of year rebalancing. Though our call of closing over 4,000 isn't going to hit. That said, things don't look good going forward as central banks suddenly express their impatience with inflation. Though prices are easing, it's not at the pace they would like given their targets are around 2%. An environment where it stands closer to 7%. And that's what the market's reacting to. They're willing to place economies into recession to attain their goals, and you see it in the bond market. The US bond market knows that rates are heading higher, yet aren't retracing to a great degree because they're still looking beyond short term and focusing on the recession ahead. The Fed likes to kill growth and then resurrect it. China is suffering the same fate as the West, as lifting COVID restrictions and vows to support their economy has fueled capital repatriation. The only recent positive has been the EU oil price cap, which will help with accelerating the drop in inflation. Regardless, it fuels Putin's ability to kill Ukrainians. Putin has no problem selling oil at $60 versus not selling it at all. The question is how long the reduced price will take to make it to the rest of the economies to reach a rate of deflation that satisfies central banks. All that being said, again, he's going for the investor trend suggestions. The suggestion is neutral. It strikes at a short putter far enough to give you great accumulation levels, or just money in your pocket. And continue to do the featured investor suggestions. The BFFs are great accumulation levels, or it runs through your target for no cost. Minimal worries about getting chewed up on stops like we did with the trader trend this year that we advise not to take. As for commodities, metals finally caught a bid, but recent tops are probably going to hold. Playing the range is the play. We'd still stick with, given our choice between owning equities at these levels or bonds. We choose bonds call. Bonds are an investor's dream. Collect the put premium, walk away. Oil, we thought the only thing that kills it was a global recession, given that's the central bank's goal. We have to embrace the possibility of sub 60 oil. Bottom line, remove the stress and play it wide. All right, so for Baidu, we had a June 75, 115, 130 BFF. We got triggered on it, and currently at 50% credit, it's now a 6-cent debit of 137, and we will take a look at it. Baidu. Oh, here we go. So Baidu, here it is. So here's our entry over here just recently, and it's up a little bit, and we're just gonna sit there and take it. So here's our take profit at 129.99. Stop way down here at 72.50. So that is what it is. Big window of forgiveness there, guys. Remember, if it closes in here at the expiration, then you're basically just going to keep your initial credit that you got. So that's one of the beauties of this position, right? You'll keep that 50 cents if it closes within that entire big range from 75 to 115. A lot of these didn't trigger, so because you just weren't going to get it uh, with such a short amount of time from far away. So nothing on the bonds. EWW, so EWW. Oh, we definitely jumped ahead. Okay, so EWW, you had the 48.78 naked put. You sold for 90 cents, and this is a March 23rd expiration. So we sold that guy, and it's still sitting there, still alive, no entry on the call vert. EWZ, the investor trend, you still had the December 30th expiration, and you sold it for 33 cents and went out worthless. Gold, we had the 168 put at 197, went out worthless, and the vert was triggered on that bull call spread here, and we closed it, got triggered for 85 cents, we closed it for 164, 80-cent profit. Silver, the 21 put sold for 24 cents, went out worthless. And you got the bull call spread did fill, 52 cents. You closed it for 102, got 40-cent profit. XME, we sold a 49 put for 170, went out worthless, and we got in the vertical on the 19th of December for 153, closed it at 81 cents, expiration for 72-cent loss. XOP, we're selling the 132 quarterly, and went out worthless, 223. That's pretty good, made 218 on that. The vert got entered, it got triggered at 1219 for 404, closed at 388, expiration, so 16-cent loss. XLE, we're going with 78 quarterly, that went out, that we got for 18 cents, went out worthless, made 13 cents, no entry on the call vert. And DBA, the 20 put got stopped same day for break even, and the vert was also entered for break even. XBI unit was under the 50, was under 15 cents, and then VNQ we were going out to March, right? So the next quarterly strike, and so that got in at 64 cents, and it's still alive. And nothing else. Everything else was all the other investor trends were a end of December expiration, quarterly expiration. So nothing got triggered. So that is it, guys. We're going to be doing these investor reviews once a quarter to kind of look back and see how all the feature trades worked out, look at how the calls went, see what got triggered and what did not. And really, again, please write down any comments or questions, like, follow the YouTube channel. Please follow me uh, on Twitter, for more information. I'm gonna be posting up even more information, more videos as we go forward. But if you guys need anything, and just give me any kind of feedback would be awesome on doing this. I really wish I had this stuff, you guys, when I first started, 25 years ago or something, because this is really good professional level trading, and I just love to see traders get successful. So hopefully everybody did great with this, and hopefully everybody had a great new year and is ready to really get after it in 2023. All right, everybody, thanks.